Hi everyone, it's Vladimir Gortsev. This video is about the trades I made using the momentum scalping strategy. In addition, in the description of the video I will share links to both brokers, the accounts of which I used for trading in this video. Both brokers offer free demo accounts to learn and practice. In my free course, I provide a detailed description and demonstrate all my strategies that I use for trading. The link to the course is available in the description of this video. The lessons of the course are delivered automatically every 24 hours and remain there, so you can study later at your convenience. After the course, I do not offer any paid additional content. I think it is time to move on to trading, which I sped up in this video for comfortable viewing. I will supplement these live trades with my comments and explanations. The first price momentum we see in this video is ascending. It consists of 3 candlesticks. The first and third candles are quite long, while the second has a medium-sized body. As soon as the third candle closes, I enter into a $10 put option. The expiration of the option is 1 minute, since the time frame of the chart is also 1 minute. The market price almost immediately begins to decline rapidly. In a minute after entering the market, I get my profit. The transaction is closed and we move on to the next market situation. Here, the momentum is already directed downwards, and the second of the 3 candles of the price movement is again of quite a medium size. The price impulse is not in the filter, so we can enter into a call option. By the way, you can learn about what a filter is in the momentum scalping in a separate video, which is available in lesson 4 of my free course. Almost immediately after a position opens, the market price begins to grow and it quickly becomes clear that there will be no difficulties with this transaction. The option closed with a profit. The gain from the transaction is instantly added to the balance of the trading account. And here we already have a chart with a 2-minute time frame. As you can see, I entered after the 5th candle of the impulse. I want to emphasize that this is not a 3-candlestick strategy or anything like that. Here, close attention should be paid to the speed of the momentum and the length of the candles. The third green candle had a small body, so it was not possible to enter after it. The 4th candlestick of the momentum also had a small body and a fairly long upper shadow. This is also a bad pattern for entry. When the 4th candle closed, I waited for the 5th candle. If it were reversal, red, then the momentum would have been broken and I would have already given up tracking the situation on the chart. As a result, the 5th 2-minute candle turned out to be long, which complies with the conditions of the European momentum scalping strategy. There is no filter on the chart either, so at the closing of the 5th candle, I entered the market. The option was bought in the direction of decreasing value of the asset, and according to the rules of the strategy, its expiration was to be equal to the time frame. When the trade closed with a loss, as the momentum only intensified, I immediately entered into another 2-minute put option. If the cost of the first option was $10, then the second contract was purchased for $30. We see that in the last 2 minutes, the price strongly corrected downwards and my second trade closed with a profit. The income from this option covered the losses on the previous trade and generated profit. The next hike in the price overcomes the filter. I marked it on the chart for your convenience. The 5th green candle closes and I enter into a 1-minute put option. The market continues to rise, so I am preparing for the second trade in the series. By the way, in this impulse, I did not take into account the first green candle, since it had a small body. It does not tell us anything about the development of the impulse price movement. Due to filter restrictions, it was possible to enter the market only after the 5th green candle. The expiration for the second option does not change. Let me remind you that I use a modified money management model in my trading. There are no more than 6 trades in my sequence, and the expiration values of the last 3 options change significantly. All the details are available in my free course. You can find the link to it in the description of this video. Let's see how events will unfold on the price chart. a corrective candle has formed on the chart and the trade closes with a profit. Let's continue to watch real-life examples of using the European strategy. Here's a price chart with a 2-minute time frame and a 2-minute expiration. A quick downward momentum consists of 5 red candles in a row. After the third candle, it was impossible to make a transaction due to the filter. Unfortunately, I did not capture this pattern in full scale on video so that you could see the level of the filter. The fourth candle on the chart has no body, so we do not enter the market after it. In this situation, we just stand by and see what happens next. The fifth candle was in the direction of the momentum and had a long body, so when the candle closed, I entered into a 2-minute call option. The corrective candle turned out to be of medium size, but this is quite enough to make a profit from the transaction. Another 2-minute chart shows us an upward price acceleration. The momentum here consists of 3 green candles, the last one being longer than the previous ones, which is usually a positive factor for our trade. The market almost immediately began to decline, but it did not happen too fast. Now we will see how events developed further on the chart. The candle closed with a minimal body, but this was sufficient to get the entire amount of profit from the transaction. Let me remind you that the amount of our income from the option does not depend in any way on how many points the price has moved in the direction we need. And here I entered the market after the fourth green candle. Do you already understand why? In fact, there are 2 reasons for this. The first reason is the size of the body of the third candle. As we can see, this is a small candle, and after it, you should not enter the market, according to this trading strategy. The second reason is the filter, which does not let us open a position. Until the price impulse overcomes the filter level from the bottom to the top, we cannot buy a put option. It is the fourth candle in the momentum that has a sufficiently long body and breaks through the filter level. Since the chart was analyzed on a 1-minute time frame, the trade was entered for 60 seconds. We will soon see how the position will automatically close. And one more trade closed with a small corrective candle. This is a big advantage of the market, that in such circumstances we do not lose part of our earnings from the transaction. Now let's move on to the last market pattern I wanted to show you in this video. Here we see that the price decreases and approaches the filter line. We enter into a 1-minute transaction in the direction of an increase in the value of the asset. At first, the market price fluctuated in the area of the transaction, but then it began to decline rapidly, intensifying the momentum on the chart. At the end of the trade, I already had the amount for the next option, and as soon as the first trade closed with a loss, I immediately purchased the second call option contract of the series for 1 minute, but now for $30. The price gradually began to grow, and a little later, it will accelerate to the top of the chart. Thank you for watching this video to the very end. You will find a full description of this and my other trading strategies in the free course. If you have not taken it yet, I advise you to think about it. The course is completely free. I will share the links to the official websites of both brokers from this video in the description. I wish you successful trading.